Today's financial organizations are under constant pressure from cyber threats, outages, and more. Economic and political uncertainty create even less room for error. At the same time, customers continue to expect seamless, always-on experiences. In the face of these disruptions, organizations are tasked with keeping their systems secure and reliable. But building digital resilience brings major challenges. In this webinar, you'll learn why building digital resilience is a team effort. Hello, and welcome to this video webcast titled Resilience as the Foundation for Growth, sponsored by Splunk and CIO.com with a guest speaker from IDC. My name's Tom Schmidt, contributing editor with CIO Marketing Services, and I'll be the host of this webcast. Joining me is Jerry Silva, Vice President for IDC Financial Insights, responsible for the global retail banking practice. Jerry's research focuses on technology trends and customer expectations and behaviors in retail banking worldwide. He draws upon more than 35 years' experience in the financial services industry. Hello, Jerry.
Hi, Tom. Thanks.
Also joining me is Charles Adriaansens, Financial Services Industry Advisor at EMEA in the Strategic Advisory Group at Splunk. In this role, Charles supports financial services organizations' use of the Splunk platform to address key industry use cases and business outcomes. Welcome, Charles.
Thanks, Tom.
And please welcome Christian Kriesong, Managing Director of Financial Services Strategy and Advisory for Splunk. Christian is a seasoned executive with more than 26 years' experience in various functions, including global IT operations management, technology planning, solution implementation, and strategic consulting. Hello, Christian.
Thank you for having me, Tom.
And finally, let's welcome Matt Swan, Field CTO for the Americas at Splunk. With more than 28 years of experience in the technology industry, Matt is a strategic advisor who has led digital transformation and innovation at some of the most disruptive and successful companies in the world, such as Amazon, Nubank, and Citi. Welcome, Matt.
Hey, how are you?
Jerry, you and our panel have a terrific conversation in store for us about the increasing volume of regulation and the need for resilience. But can you kick things off by sharing with our audience what IDC is seeing about how financial institutions are positioning themselves to future-proof their organizations?
Sure. Thanks, Tom. This is a really interesting time, given the complexities that's happening right now in financial services between the infrastructure changes we're making, the move to cloud, the advancements of generative AI, for example, on top of AI that we've been working with for years. In addition to new regulations coming out, whether it's responsible and explainable AI, whether it's operational resilience, that's really hitting globally. Add to that, or in the crux of those things happening, we are about to start the budgeting cycle for most financial institutions. So this has become a very complex time to try to manage through. What I'm showing on this slide is a recent survey we ran around the intentions on spend in financial services. And what you can see here, what's interesting here is that the top two line items, and the question was, what is the most immune area to budget cuts going forward in the next 12 months? The most immune areas were those around security, risk, compliance, and then secondly, optimization of the digital infrastructure. So that kind of gives you a sense for where the minds are, particularly in the CIO office and the CFO office, around where cuts can take place and where they can't take place. But I think what's interesting here is if you look at the rest of the categories here, for the most part, they're line of business initiatives. And so in my mind, again, going back to when I actually ran a technology shop for a number of banks I worked for, I think what you can read into this is that they're making these changes to security, risk, compliance, resiliency, optimization, efficiency, and so forth in order to fund and in order to enable the future business plans for the institution, which I think is great. You know, one scary statistic that we learned, for example, around generative AI is when we ask the institutions how they plan to fund any generative AI initiatives, the answer was, for 1 out of 3 banks, was we will aggressively cut other programs in order to fund Gen AI. Now, if you're an ex-banker, that kind of makes you worry because then the next question is, you know, what do I plan to cut? Who's going to be on the chopping block? So I think through the work in risk, security, compliance, resiliency, optimization, and efficiency, I think what the CIO is trying to do is free up more funds, more investment funds for the lines of business to be able to innovate, be able to penetrate new markets, be able to increase customer satisfaction, and so forth.
Very good. Thank you, Jerry. Matt, does the data that Jerry presented resonate with what Splunk is hearing from the market and its clients?
Yeah, there's no question. I mean, folks are really focused on two things. They're trying to figure out how to drive more business value and business growth, whether it's through AI or kind of other products and capabilities. And to do that, like, we all have to be resilient, but we also have to be efficient. And I think what everyone is facing is an increasing level of fragmentation across their landscape, the number of technologies, the rate at which innovation and speed and change is kind of happening. And so I think to have that resilience and to really think about even responding to some of this regulation, you have to have a platform and a framework that really enables you to dial in your efficiency so that you can give back to the business, but also kind of maintain that level of sort of protection and diligence.
Charles, so how are financial services organizations responding to the requirements of operational resilience regulations like DORA and other regulations in other jurisdictions?
Yeah, I mean, it's a key trend. Regulators all around the world are introducing operational resilience regulations, which require every financial services organization to be compliant. The Basel Report of 2021 highlighted the fact that further work is required by the industry as a whole to effectively manage operational issues. A lack of operational resilience, of course, has the potential to destabilize any organization and also threatens the stability of the industry itself. There are many examples of operational issues. These could include cyber attacks, technology failures, as we've mentioned, but also natural disasters, political and economic uncertainty, which we've got a lot of at the moment, and of course, pandemics. And yes, at some point, there probably will be another pandemic. And as a result of this, we've seen operational resilience regulation introduced in many jurisdictions, including Europe, APAC, and North America. In the UK, we've been through the first set of requirements, which required all financial services organisations to identify their important business services and set timeframes for what constitutes an unacceptable level of service unavailability for each of them. This is quickly followed by DORA in the EU, the Digital Operational Resilience Act, which provides actually more detailed requirements, and it places equal focus on cybersecurity and IT operations. But how are organizations responding? Well, at the moment, they're starting by performing some sort of gap analysis, which looks at their current analytics of data against the requirements of legislation. This is causing many organizations to put in place new tools and technologies that provide them with, in particular, end-to-end visibility of critical business services, i.e. observability. They're also reviewing and, where appropriate, updating their cyber security posture. The fact they're doing this is already having a positive impact on operational resilience, but because disruptions still continue to occur, this suggests that more work yet still needs to be done.
Jerry, is there more nuance in how institutions are thinking about or investing in solutions to address resilience?
Yeah, as I mentioned earlier, there's that complexity of the infrastructure, whether it's something you have to do for cybersecurity or operational resilience or in the AI platform, data management. There are so many things coming together that the institutions are kind of taking a half step back and asking themselves, where should we focus our time and effort? And more importantly, is the organization, from a culture perspective, ready to move forward given all of these challenges? So one thing that I've seen more and more of, and in fact, I've got a conversation coming up with a bank pretty soon around this, is how do we attack the governance issues surrounding all of this, whether it's cybersecurity, risk management, resiliency, scale even. So scale's coming into play as well, given the fact that it's not just our data centers anymore. Now we're working with multiple cloud providers as an example. How do we manage that, both from an infrastructure perspective as well as from a third-party risk perspective? And so I think there's kind of a drawing in now and they're starting to look at the organization. Do we have an adequate governance organization, an adequate governance policy and processes in place? And if not, where are we going to get those people? And in most cases, by the way, if you're not a tier one institution, it's about redirecting the focus from maybe, institutions that were used to building something on their own. Now they may be thinking, well, maybe I should partner because I frankly don't have the time. And as a bank, I'd rather focus on the things that I know about, risk management, for example. And it bugs me. It's funny. Every time I hear a commercial from a financial institution saying, oh, we're actually a technology company that does banking, I want to pull all my money out of that institution because they are bankers. They're not supposed to be technology people. Now, obviously, there are exceptions. There are some institutions that do technology really, really well. But I think what's happening today, given, this perfect storm of things that's happening, they're really kind of drawing back and saying, okay, we need to develop those governance policies, that strategy around governance, encompassing all of it, risk, compliance, resiliency, scale, and so forth. And I think that's the nuance here. It's not just about the technology. It's not just about complying to a new reg that's come out recently. It's more about how do we as an organization essentially future-proof ourselves from that perspective, from the governance perspective, to be able to move forward and not have to go through this cycle of, well, we need to make a change based on this system or based on that platform or based on this capability. How do we develop a governance model across the entire enterprise that lets us move more swiftly and smoother into future innovations?
Good points.
Yeah, I mean, Jerry, I'd add in kind of a couple of things. I think it's interesting. You're right. There are tools and technology that people need to implement. That's is all about detecting kind of these issues when it comes to resilience. And I think the things that the people know best are how to put in tools or platforms and kind of implement that technology. But I mean, the bigger drag when you think about how you respond and recover to those events, or how do you sort of defend yourself when it comes to ensuring you've got the right risk controls and regulation, that's where, people are at the crux of this, right? And so I think finding good tools that give you leverage and platforms that kind of enable, that detection, but then to your point, really focusing on the people and the culture, the governance around this in terms of how you're going to manage, that sort of responding and recovery piece.
Well, absolutely agree. Yeah, the technology can't be left out. But you've got to attack both sides of that equation.
Jerry, another question for you. What are the main challenges for financial services organizations in relation to responding to the increasing volume of regulation?
Right. Yeah, so it kind of tacks on to the previous answer, right? So part of the challenge is the governance, is the organization itself, and I've kind of talked through that one. I think the other one, and kind of to Matt's point here, is that the size of your digital infrastructure, particularly if you're an institution of any given size, mid to large institution, that infrastructure is now so complex because you're dealing still with your on-premise data centers. You're dealing with, in most cases, multiple cloud providers. You're dealing with the network providers. You're dealing with third-party providers of some functionality. For example, if I'm a bank running a mobile banking application, maybe the authentication of the consumer is being handled by a third-party partner. You take that all the way out to the edge. And now you've got this massive and, again, complex environment in which the institution runs. And again, to Matt's point, how do you monitor all of that, right? How do you know when there's a disruption, where the disruption took place? In my mind, there's two things, right? One is the observability, knowing that a disruption is taking place. And the second part of it is, how do I address it? Who do I send it to? Can I automate the process around remediation or some sort of response? And so that, I think, from a technology perspective, is the biggest challenge, is knowing what's happening in that widening digital infrastructure, figuring out what to do with that alert, if that's what it is, or figuring out how to respond to a disruption, whether it's local to your own network, or maybe it's something that's happened. We also recently saw the disruption to Windows. How do you deal with that kind of a disruption, even after you've been able to observe it or have gotten notice about it?
Yeah, I think, Tom, I'd also say in response to kind of the regulation itself, when you see a lot of these executives and you think about, you're going to design your internal process to, observe and kind of detect and kind of manage these events. But you obviously, you not only need a platform and kind of governance, but you need a framework to deal with the regulation. You need to assess your maturity. You need to track your progress, right? When you have, incidents, you need to be able to, communicate, what's happened and kind of what you've done about it and kind of manage that along the way. And I think, again, that's a key aspect, I think, of not just the governance of changes, but how you want to manage your overall operating model in response to, meeting the needs of those third parties and your customers.
Yeah, and Matt, maybe I'll add, just again, given my experience, it seems to me that the auditors, so if we're talking about resiliency regulation here, whether it's DORA or their Canadian Resiliency Act around their credit unions, it seems like almost the most important part is being able to report on what happened or what processes you have in place or what tools you're using. That seems to satisfy a lot of the auditing requirements that come in. How you respond then to a disruption, whether it's minor or major, is kind of the second part of it. So being able to pull out the observability aspects of your infrastructure seems to be incredibly important when it comes to the auditors. They just want to know that you're doing the right things. You've got the right things in place. And then if something happens, that's the second part of the story.
Kristen, how do you talk to your clients about the challenges that Jerry just cited?
Yeah, so as everybody here mentioned, right, the world is becoming more complex. And I think for financial service institutions, there is always a balance between innovation and their desire to be first to market or provide new services. And I would say this almost speed break that increased compliance and regulations are posing, right, a challenge. So customers are really struggling to create a balance between continuing to innovate while these new regulatory compliance requirements. I think there is also a very personal touch today, since changes to the Bank Secrecy Act now hold officers of the company personally responsible, right, for material breaches or not disclosing MRAs. And this is a change that's fairly significant, because this is now very much a personal matter for some of these executives outside of just the financial penalties, right, or the fines. So I think that having a plan, back to Matt's point, and having a set of processes or guidelines is really the first step. And I think the second step to this is, who is the right technology partner or partner that would allow them to take this journey, right? And what would prescriptively this journey look like to them? I think boiling the ocean is obviously not an option, but having the right observability strategy and security strategy, and by the way, they both go hand in hand. It's what needs to be in place in order to go ahead and basically address resilience. So that's where we are, and I always encourage them to take a comprehensive look on who the right set of partner or partners are to get there. The last thing I want to mention is, obviously there is a lot of buzz about Gen AI and what Gen AI could actually do, right? Both from a risk but opportunity perspective. And I think this is another area where companies are starting to kind of crash the service and try to understand how can they use this technology to possibly replace or augment, let's say, a lack of skilled resources to think of compliance, right, or investigation, but also how can they protect themselves from increased attack vectors, and what would that look like, right, as they're building these walls. So it's a challenging time, but it's also a very opportunistic time, in my opinion, for the right technology companies, because we can help these customers in this journey.
Charles, have you seen business benefits in helping your clients address some of these challenges and improving resilience?
Yeah, and I think a lot of the focus, certainly initially, has been around the regulation and being compliant, but actually there are tangible benefits associated with being resilient as well. So, for example, improving resilience helps any organization, not just a financial services organization, to minimize lost revenue, for example, when critical services are unavailable, which is part of the regulation, but there's a financial benefit to actually putting in place the ability to respond quickly. This helps to ensure customer experience is maintained, as well as avoiding any regulatory fines, and there will be regulatory fines that will be administered by the regulators themselves for non-compliance. It also has the benefit, and this will become increasingly important as we move forward, of enabling product and service innovation, enabling them to compete in a competitive marketplace. If I focus on one thing that we're talking about a lot at the moment, the cost of downtime is something that many of our customers are concerned about because that can be so significant. We recently produced a report which estimates the total cost of downtime as being $200 million per organization per year, which of course is significant. And within that, lost revenue and the potential for regulatory fines are the biggest components. And regulation itself is only going to add to the cost because the magnitude of fines is likely to go up once regulation is implemented. And a couple of examples, for example, DORA fines could amount to 1% of daily worldwide turnover, which is a significant sum for bigger organizations. As an example of a fine that's recently been issued, a bank in the UK was issued a fine of almost 50 million for its critical services being unavailable, and that impacted just over 5 million customers. So it's a large-scale issue. And they're the sort of short-term factors, but in the long term, perhaps the greatest impact will be on customer experience and reputation. If an individual service is unavailable and the customer cannot complete a time-critical transaction, this is clearly a moment of truth in their relationship with their provider, and it could cause them to take their relationship elsewhere if they're not able to complete that transaction within a reasonable time frame. But thinking on a larger scale, if this happens regularly to a large proportion of the customer base, it will threaten the entire organization's ability to survive in increasingly competitive marketplace. And I think that's the next step in terms of what our customers are starting to think about when it comes to resilience.
Yeah, Tom, I'd add in kind of a couple of things on this, and Charles. In terms of getting to value, every second that you spend operating and responding, to resilience or kind of regulation is a second that you're not spending building on behalf of your customers. And so I think there is a whole efficiency side of this that for folks, their technology landscape is becoming more fragmented and complicated. They've got new revenue growth and, opportunities for, kind of their customers, and that's kind of the battle. But I think that the way that you invest in the sort of the efficiency of that platform for, how you can identify these issues, manage these issues, and, and kind of respond to some of this regulation is a direct try to business value, just because, those resources can spend the right time doing the right things.
So, Jerry, we've touched on some of them, but are there other business benefits that institutions should think about if they can improve operational resilience beyond compliance?
Yeah. So, sometimes I act like the cynical banker. So excuse me if I kind of go a little counter to what Charles just said. When we think about the financial services industry, the thing we have to think about is this is a trusted industry. And I would argue that the primary product that any financial institution offers, whether it's banking, capital markets, wealth management, insurance, is trust. And so to some extent, reputation does matter. If there's a massive disruption, it will matter to the customer. However, what I would add here is that for the retail customer, they don't tend to leave, at least not in massive amounts, should that kind of thing happen. I mean, we saw it happen with Capital One and AWS, for example. And the customers really don't, one or two may leave, but not many. But when it comes to small business customer or corporate customer, they're much more sensitive to that kind of disruption. The other thing I would say is, and again, Charles mentioned this, if it happens once, it's one thing. If it happens on a regular basis, which if you're not doing anything and you're increasing the complexity of that infrastructure, it will happen more than once. Then it becomes a chronic issue, and then you have to worry about customer attrition. So I think that's one thing, right? How do you maintain and actually build the trust further within your customer base? That's number one. Number two, I mentioned this before, by investing in enterprise-wide, holistic kind of approach, including governance to resilience, whether it's cybersecurity, operational resilience, whatever it is, you're freeing up funds for innovation, as Matt was talking about. You're actually enabling the business by creating that kind of a platform. It's almost like we have to go back to table stakes. In financial services, table stakes is making sure the data is private, making sure that the communication channels are private, and so forth. But now we're talking about including the infrastructure in that trust, in those table stakes. And I think that's where we're headed. So we really have to reset and say, okay, what are the table stakes now going forward? not disregarding the regulation. That's certainly part of it. That's really what's driving us to that point. And the third thing I would say, and this is, I think, what most CIOs fear. We talk about the financial losses due to a data breach, due to a disruption of some sort. And that's, I mean, I'm not going to say that's fine, but that's something that most institutions are at least partly prepared to handle should there be a disruption. In fact, I remember going through the budgeting cycle again about this time of the year, and we would actually add some numbers into the budget to take care of events like that. The biggest fear, aside from reputation, is the regulatory response should something happen on a regular basis. And here I'm not talking about, DORA's out there, so you have to comply with DORA. That's fine. But if we keep seeing disruptions, if we keep seeing data breaches and the industry doesn't do something, the regulators will. They'll either expand the existing regulations or introduce new regulations where there aren't any today. The CIO is already spending 30 to 40%, in some cases 45% of their total IT budget on risk, compliance, security. They don't want to spend another 1 to 3% on some new regulation that has come out. So from that perspective, they're actually kind of future-proofing their budgets by doing something now that creates a brand new kind of context for resiliency and cybersecurity, operational resiliency, and trust, including the governance aspects of it, so that they can avoid those future regulations coming in.
Jerry, as you mentioned before, CIOs are struggling to support so many initiatives inside the institution, as well as new technologies like generative AI that potentially distract from must-haves like compliance. How do they manage all of that?
Not very well. I mean, I hate to be blunt about it, but not very well at this point. Last week, I was at a CIO conference with a number of industry CIOs that came together to talk about these things. And again, I'll keep mentioning this is the start of the budget cycle. So everyone is having these questions. How do we address all these things, particularly when it comes to the push that we're getting from generative AI? How do we free up the funds for that? To what extent do we have to change our operating model to accommodate for, the large language model, how we're keeping our own data private, and secure. So they're all kind of going through this process of trying to deal with all of this. And again, it's a lot of internal conversations right now. I think you're going to see a lot of institutions change their internal governance, whether it's at the organizational level, at the policy level, at the process level. I think you're going to see a lot of that changing going forward so they can prepare for that next stage of complexity. And they're going to be looking at their business lines as well and saying, well, what are you planning on doing for the next year or two or three? And how do we enable that? How do we build into that? One of the things that's kind of interesting is that the role of the senior architect or the line of business architect is becoming more and more prominent within financial institutions because they're the ones that have to have that whole picture in their head to say, this is what it looks like today. This is what it needs to look like in order to accommodate all these line of business initiatives. And so these are the things that it's going to impact. Again, whether it's scale, cybersecurity, data management, enterprise-wide AI platforms. So the senior architect is really rising in importance and is being now seated with, if not the CEO, then with the board as well, in order to give their opinion and to try to map out what that infrastructure looks like in 3 to 4 years.
Interesting. Matt, how have your clients addressed the priorities, staff changes, and maybe cultural changes that Jerry talked about?
Yeah, I mean, it's been interesting. I mean, I think you see, obviously, the capacity planning and governance. You have a business strategy, and your technology strategy is there to enable it. And, what we're seeing is not only this fragmentation that I mentioned, but, the addition of all these new kind of technologies. And that means, you're going to shift the mix in that framework, right? And that means you're going to focus on some people, initiatives to drive through that change. I think it's important. One of the things we're seeing with folks, like with the advent of, kind of the arrival of AI, has been sort of a polarized approach in places like, there's a level of fear. We must kind of jump on, kind of this bandwagon. And I think without going through sort of the adjustments to your framework, being thoughtful about how you're inspecting what you have and how to find leverage and to kind of go get these things, you can swing a little bit too far. And I think that's why the importance of governance and really looking at these things is critical, and so that you understand what decisions you make and then where you're going to find value.
Very good. Charles, beyond the technologies that you bring to bear to improve resilience and compliance, what other advice or guidelines do you bring to clients?
Yeah, I think the first thing to say, I guess, for regulatory requirements, which is what we're talking about mostly at the moment, is this that should this be viewed as a starting point, really, for improving operational resilience? Where regulation is in place, this is likely to remain the focus for the short term in financial services organisation, at least until the deadline for being compliant has passed. And in both EU and UK, that's early 2025, so just around the corner. But being compliant, and this is quite important. Being compliant does not necessarily mean an organisation is resilient. They need to do more than that. Obviously, once the initial compliance objective has been achieved, organisations can then think about creating a more mature posture, covering all their people, processes, and technology. And to support this, we've been working on a maturity model that can help any organisation improve its posture based on 4 levels of maturity. And what we found is that the requirements of regulation typically take an organisation up to the second level of this model. So that is level 1, they've got visibility of their critical services typically. Level 2, they understand service health. But there's 2 levels of maturity that go above and beyond the requirements of regulation. Our level 3 is anticipating issues before they impact end customers. And level 4 is the ultimate goal, which is optimizing the customer experience. And only by getting to level 4, level 3 or level 4, can financial services organizations start to say that they are resilient. And even then, the work never stops, because resilience, I don't think, is a task that can be ticked off as complete. It needs to be constantly monitored and reviewed. So most customers are on this journey in their various stages of our maturity model. And what we try and do is help them become more mature, whatever that means to them.
And by the way, Charles, that's an important point that we need to bring out. This is not an easy thing to do. Again, given the increasing complexity of the infrastructure, you can say, well, we need to be resilient everywhere. But getting from here to there is going to take a while. Frankly, it's going to take a while to not only recognize where your infrastructure is today, but where your weaknesses are, what kind of tools you want in place. So this is not something that we're going to solve in this year's budget, but it's something we definitely have to get started on in kind of a consistent way across the entire enterprise.
Yeah, if I may add to that, Jerry, I mean, compliance is not a point in time. Compliance is something that should be addressed continuously, and so does resilience. So to Charles's point, right, the work should never stop. I think choosing what the priorities are and making sure that you're focusing or investing in the right areas as you prioritize is key. I think on the other side of it, this cannot be looked as a point in time. It's to be looked at something that's continuous.
Panel, it's time to wrap things up. What's the key takeaway you want our audience to bring home from our conversation today in a nutshell? Matt?
Yeah, to me, it's leverage and inspection. It's really, folks really have to find the commonality in these tools to get leverage in the way they inspect these things to stay resilient. And I think when you're investing in that in people, you're going to be on the right path.
Well put. Charles?
Yeah. For me, it's that last point, which is all about the journey. Resilience is, in fact, a journey, and that the fact that no organization could or should ever say that they're 100% resilient. I think acknowledging that fact is really important. And I think once that's understood, the priority for any organization must be to consistently monitor and involve their resilience tooling to make sure the impact of any issues is minimized on their end customers.
Very good. Kirsten?
Yeah, I mean, basically Matt and Charles covered it, but I would say 3 things, right? Make sure that you have the right people and processes in place. And I would say the other side of it is really making sure that you choose the right technology partners for this journey and that you also budget appropriately to help you get there. So I think that losing mind budget would be a mistake. So
very good. Jerry, you have the last word.
Thanks. Well, first of all, I love what Charles said, and I love this term. I'm going to use it as well if you don't mind me stealing it, Charles.
No
But
problem.
compliance is not resiliency. They are two different things. Compliance is being able to say, check off a checkbox that says, yes, I've agreed to and I uphold the terms in this 200-page document. That's compliance. Resiliency is much more in the business context, is how do I ensure the future of this organization and minimize the risks while I'm delivering products and services to my customer base. So that's number one, understand the difference between compliance and resiliency. I think the second thing I would say is, to quote Shakespeare, to thine own self be true. Understand what you as an organization, as an institution, can do well, recognize those areas where you can't do the best job you possibly could, and leverage more and more of your partner ecosystem to deliver some of those technology solutions that frees you up then to either handle the governance aspects of it or redirect a lot of those resources back to the lines of business where it really counts.
Very good. Well, that's about all the time we have for today's webcast. I want to give a big thanks to our speakers, Jerry Silva of IDC and Matt Swan, Charles Adriensens, Christian Creason of Splunk, for sharing their insights and expertise with us today. Thanks to you, our viewers, for tuning in. For Splunk and CIO.com, I'm Tom Schmidt.